Welcome back to the Isn't That Rich podcast. I'm your host, Jill Franks.
And I'm Ashley McVicker.
And today we're diving into an important but often overlooked tool in protecting a business, the buy-sell agreement. So whether you're in a partnership or own a family business, this type of planning can mean the difference between a smooth transition or total chaos when life throws a curveball.
And today we are sitting down with two of our FSB insurance agents, Nathan Ashby and Eric Witges, to break down what a buy-sell agreement is, how insurance funds it, and the conversations every business owner should be having today. If you've ever wondered what happens to a business when the owner passes away, retires, or becomes disabled, this is the episode for you.
So welcome on, Nathan and Eric. So I think we should just get started talking about what the heck is buy-sell agreement and why do business owners need one?
Well, a buy-sell agreement is basically an agreement between business owners that outlines some protection in the event that they would no longer be partners in a business, whether somebody backs out of the relationship or someone passes away. So it's basically a structured agreement on paper written out that here's how this will exit. So it's pretty crucial to have terms outlined, in the event that you part.
Yeah, we always say you never plan for a divorce or you never plan for your business owners to part ways, but you always want to have a plan in place in case that does happen. It's kind of like a prenuptial agreement for a marriage, right?
That's
This buy-sell agreement.
Very, very similar.
Okay,
yep.
Got it. So it's just kind of a legalizing everything or legitimizing it rather.
Right.
Okay. Well, good.
I think the inclination at first when you talk about a buy-sell agreement, you're automatically thinking this is not for me because it's a large business or I don't generate enough revenue. And I think we need to talk a little bit about how this affects the ordinary person too, just as much as it does someone that you're seeing on TV or that is a corporation. This can affect the plumbing business next door. This could affect the electrical business next door. It could affect whoever. And I think sometimes we overthink that sometimes and think that it's not for us because it could affect us. Mm-hmm. And that's probably the most important aspect to think about is it will affect them more than it would someone else.
Yep.
Right. I even think of family circumstances. We kind of mentioned families in an introduction. Like you would never imagine parting ways with a business that you own with your family members, but what would happen if you would have to part ways? Like it's always good to be prepared with something like this.
Sure, even in a family farm situation.
Yes.
You want some perpetuation of that farm and, you want it to continue on. It's your legacy. So
Is a buy-sell agreement something that you can only get prior to starting the business, or is it something that, let's say you've had the business 5-10 years, you're like, I feel like we need a buy-sell agreement. You can do that and then fund it with insurance.
Anytime. So
really? So we've been operating this family farm for 100 years.
Right. And then, okay, let's put some rules down. So yeah, it's better to do it when you're thinking of it than just to continue to procrastinate on that.
To go without.
Yeah.
Okay.
So I just mentioned insurance and funding it. Can you guys tell us kind of what that means, funding this buy-sell agreement? Because the buy-sell agreement isn't the insurance, correct?
It's just the paperwork, right?
It's the agreement in place.
Okay.
Yeah. So the buy-sell basically spells it out from A to Z of what would happen if one partner would pass away and how that would get paid out, how it would be divided, et cetera. The life insurance policy comes into play is if, I guess the best way to describe it is, let's say that Nathan and I start a business together and we each then would buy a policy on each other for the value of that half of the business.
So you both, let's stop there. So you both would purchase into this.
Correct.
Yes.
Yeah. So
Okay.
I would buy one on Nathan. Nathan would buy one on me.
Life insurance policy. As
Correct.
business owners, Eric, you're buying a life insurance policy on Nathan. Nathan's buying a life insurance policy on Eric.
Correct.
Okay.
Yeah. And let's say the value of the business is $1 million. So I'm going to buy a $500,000 policy on Nathan. Nathan's going to buy a $500,000 policy on me. I pass away. So then my proceeds of my policy then would go to Nathan, and Nathan would use those funds then to buy out my family as a result of our ownership of the business.
I see. Okay. So the life insurance policies fund the agreement.
Correct.
Okay.
Yeah.
That makes sense.
So it's an option to fund it. Of course, there's different options to fund a buy sell, but the life insurance policy is pretty clean. It's tax free on that end, which is great for, I know in a corporation, there is some tax implications when there is a buyout, but on the life insurance policy side, it's tax free. So then there is nothing to worry about on that tax side with that.
Also, it's a way that to avoid a fire sale, in a traumatic situation. Sometimes you don't think clearly, but that holds the value of that business. So you're not selling off assets and everything else to hurry up and buy off the remaining spouse of the other owner. So it holds that value for perpetuation.
So you just mentioned that if your like the life insurance policy, you pass away, goes to your spouse. What if you don't have family? What if you don't have anybody that you're wanting to, I guess, give the business to? Does the $500,000 go to Nathan? Is that how that works?
Well, I'd say that hopefully there's a trust set up at that point that I've set up for my family to pass on, whoever the next of kin, or an estate piece that would receive the proceeds of that life policy.
So it really just gives him the potential to buy out.
Correct.
Okay.
Correct.
So typically when this happens, we talk about death, and that's life insurance policies. Is there any other, like, say you no longer want to be in business together and Nathan wants to buy the entirety of the business out from Eric? Is that a possibility to use this policy as well?
Sure. If you've got, you've taken out a policy that has some cash value in it, you can use that cash, surrender that policy, take that cash out of that policy, and then use that towards the purchase price to buy out your partner.
We've talked about key person insurance on this podcast before. What is the difference between a key person policy and a buy-sell agreement insurance policy? Am I saying that right?
And can you have both?
Well, sure.
I guess.
Yeah, you can have. They're
like, yeah, you can buy as much insurance from us as you want. No.
So I think the key man you're thinking about is a person that maybe not in the ownership aspect piece.
Okay.
And that is a huge driver of your revenue, whether it's a salesperson or someone that knows the operations really well, then you're going to have a key man person or a key person policy on that piece. So it really wouldn't be contributing towards the buy sell piece. It's strictly on a person that contributes a well amount to that business, and as a result of losing that person, you're going to lose revenue, or the business would not be able to sustain itself.
So you can have a key person insurance policy on an owner, but when you're doing a buy sell agreement, you can only have those policies on the owner, right? Like the two owners. Does that make sense? Because you could have key person insurance on people that
work for you.
That just work for you. But
Right.
you wouldn't have a buy-sell agreement on people that just work for you.
Correct.
So that's kind of the difference.
Yeah.
Okay, so what are some options for funding a buy-sell agreement, and why is life insurance often the preferred method to do so? Or is it the only one?
Not the only one. It's probably just the most cost-efficient method of funding a buy-sell. You can do several different options. You can do something as simple as a term life insurance. That's going to be your most affordable, but it's going to be for a specific period of time. It's not going to have any cash value that adds to that policy later down the road. But a lot of our folks will do like a universal life policy, and then it's like a savings account for them to put extra money in that policy. That they can use then on a balance sheet and show as an asset for the business. So it'll help their financials out, when they go to the bank and different things. So, that's one of the ways a lot of our customers will utilize the buy-sell funding of their agreement.
Yeah, because we were talking before the episode and I mentioned I was in a partnership where we had a buy-sell agreement in place, but we actually didn't fund it. Eric said, well, you probably self-funded that because we did part ways and we ended up paying each other, got a loan or did whatever. And that's more of a self-funding method without having the insurance policy in place. Yep. So that just would have helped me.
Yeah. Yep.
Be able to purchase the other half of the business if I needed to or wanted to.
Right.
Mm-hmm.
Okay.
Right. I was just going to say, so essentially, if she would have done a policy, would she have, I don't want to say made more money, but is that correct?
Well,
or
she wouldn't have had to use her
fork
her
up my own money.
Funding.
Yeah.
Right.
So she could have, surrendered whatever life policy she had, take the cash value out of that policy, and then turn around and pay her former partner.
I see. So I would have had more cash on hand to do that.
You missed out.
I did.
Yeah.
Yeah, I think the other thing we probably want to mention and hit on is, you're buying a life policy on the other person, but you also keep in mind the age of the person, the health of that person, if there's any contributing factors, because while it's not just simply going into a shopping store and saying, hey, I want this 20-year policy, there's underwriting that goes into these policies too. So there's going to be factors of, if blood pressure is a problem or if the health of the other person, that could vary the life policy. So my policy could be more expensive than Nathan's in that situation. So how that would be spelled out as well. Because there could be substantially difference in the premium of the policy based on the health of the person and the age of the person. Yep. So, that's something else to consider during that.
Well, that brings me to another point. We mentioned we just use a round number, the $500,000 life insurance policies on one another up to the $1 million of what your business is worth. How do you determine the value of the policy? Is there a valuation or how does that work? Your business valuation, all that, to figure out what you need to do to fund it.
Definitely. I think you want to establish a valuation. You have to have that in order to come up with how much life insurance we need. So whether that's working with your attorney, with your accountant, or just internally, hey, what do we want to get out of the business for our half of the business or our share of the business? What's the value of our business? So you've got to come up with that. And I think as your business develops and scales, then I think that number needs to be reevaluated. So, in your early stages of business, your value of your business isn't going to be what you would be in 5, 10, 20 years as you grow. So, I think your buy-sell agreement needs to be revisited every so often and still make sure that you're still providing enough funding to buy the other partner out.
Right. So maybe having a business valuation done every so often would be worth it, spending that money on it. So then you can continuously up that.
Yeah. And the reason that you have to have that in place is when we go through the underwriting process with a life policy, we're going to be asked why that amount. Why are we asking for $500,000 on Nathan and Eric? Well, we need to justify that $500,000, and that's why we bring in that evaluation or that valuation of the business and say, here, the business is valued at blank. This is why we're asking for that amount on each person.
And you both agree to it too, so there's no confusion on that as well.
Correct.
So you both agree our business is worth this amount. Should I need to buy you out?
Mm-hmm.
Okay.
Which at the place of the event of happening, it does keep the peace, so to speak, between the partnership and their families, because that was agreed upon beforehand. And so we're not going through that process, grieving someone. We're not trying to sustain our business when someone has passed away. That is already pre-agreed upon, and we can move forward from that point there.
That's good.
As an insurance company selling these policies, and like you said, I'm kind of backing up a little bit because it's life insurance and you're talking about age and health and all those things. How often do you all check in with the two parties? I mean, it'd probably be 3 parties, whatever, on their policies. Like if something's changed with them, or is it kind of up to the policy owner and their due diligence to let you know maybe? I don't know. Like,
Yeah, 'cause that's
something, I don't know the right question to ask about the health or whatever, but are you guys like, well, it's been 5 years and he was 60 years old. Now he's 65. We need to check
we're
in.
up the amount that we charge for the policy, right? I don't know. Good question.
Typically, your cost is locked in, and that's one of
Okay,
the
so that's what I didn't
best,
know, I guess.
Yeah, that's one of the best parts of the life insurance. It's a locked in amount. So if you do a 30-year term, that price is the same for 30 years. It's not going to change, as you age or your health changes.
So your premium won't change?
Premium doesn't change.
And so that's why you all say when you're young and healthy, that's when you should probably take out a life insurance policy. Because
policies.
Yeah. But we do typically, if we have some buy-sell agreements with folks, we'll visit, every few years and say, hey, we realize your business is growing. You've added a lot of employees. You've added equipment. Hey, do we need to look at your life insurance? Are you still comfortable with your amount that you have now and your agreement that you have with your partner, or does that need to be evaluated? Mm-hmm. So just like we would go through, their equipment list or their payrolls, let's look at this aspect too. So
that's a good question, Ashley.
Thank you.
Yeah. So Ashley kind of already mentioned this, but it's never too late to buy the policy and set that up. Are there mistakes that you see or common misconceptions people have about a buy-sell agreement? Besides, you can't get it. Now it's too late. You're already...
Well, that would be one of the hurdles sometimes is somebody's health. You've got somebody that has, a history of a dread disease or something, and they may not be insurable. So, in that case, then you're looking for an alternative vehicle to fund that buy-sell agreement.
Yeah, I would, to add what Nathan said, I think the misconception that I've seen from our end is that, we're not big enough to do a buy-sell agreement. It doesn't apply to us. But really, I mean, who has $50,000 to $100,000 sitting around to be able to go buy out another partner and wants to put their family in that situation to withdraw that $100,000 out of that account? So I think that misconception is important to look at, is that it applies to any business in any industry that has a partnership of two or more, and it could be in Southern Illinois, it could be in Southern Indiana, whatever. It's not just something that applies to a large corporation or anything like that. It applies to any and all businesses.
So people are loving what this policy sounds like it can do for them. What are the first steps businesses take to go do this or sign up for this kind of a policy?
I believe the first step is come up with that valuation. Oh, yeah. You've got to figure out what your business is worth before you can purchase the policy. So
find out what your business is valuated at.
Mm-hmm.
What's next? So then they come to the agent and sit down with you and kind of share what their agreement is, or do you help them draft an agreement? How do how does that work?
Not typically, typically that's going to be their legal counsel helps them with that or something. But, take that buy-sell agreement to your insurance agent and say, here's what we have came up with, and this is how we'd like to execute it, and we'd like to apply for some life insurance.
Okay.
So you start with the business valuation. Is that a legal document?
Yes.
Yep.
And then that legal document you give to they make a buy-sell agreement.
Yep.
So we got all this paperwork, and then we come to you guys.
So you probably speak to your accountant first, say we want to do a business evaluation. Then you go to your attorney and say we want to make an agreement.
Yeah.
And now you go to your insurance agent.
That's right.
Mm-hmm.
Okay. 3 big steps.
I think that's sometimes the hardest thing in business or whatever, is just like trying to find the right person to go to first, because there's all these different, we talk about people on your team. So
yeah,
it's always good to know who to go to first, instead of going to Nathan first and he's like, sorry, you've wasted a whole day.
Yeah.
Go back.
Nope, all your trusted advisors.
Yeah.
Are there any tax implications? I know you kind of touched on it, but are there any tax implications that people should be aware of when it comes to buy-sell agreement insurance?
The benefit that pays out is a tax free, but the thing a lot of people want to ask is, can we deduct the premiums that we're paying? And you cannot deduct the premiums, so those are not tax deductible that you're paying in. So just kind of want to be aware of that.
That's good to know, but it comes out when you get paid out. That's tax free.
That's correct.
That's good. So you're not paying income tax on that.
What are some of I want to talk about the human side of this. When you all sat down with two parties, what are some of the hardest things they face when planning for this stuff, or maybe awkward conversations? Have you been in the middle of it as an agent, I guess?
Yeah, just death in general is a morbid conversation
Right.
that nobody likes to have. But it's a much harder conversation to have after the fact than to plan ahead. So,
and I think the question that one partner will ask is, I don't know what I'd do without my partner in the business. And so, then that your mind starts to kind of circle back to like, how does my life exist or how does our business exist outside of Nathan or Eric? And, what are we going to do at that point? So then, that I think can be awkward, but is also a good conversation to have because, that's the inevitability of life is there will be at some point that does occur.
Yeah, definitely. Are there any stories that come up for you right away that you're like, that buy-sell agreement? So you mentioned farming. That's a great partnership. Any other industries? You said it's good for any industry.
Or what about like a husband and wife? If they're both, I guess maybe what if they owned a business together? Are they considered like partners in the business?
Yeah.
Because I think about my parents. They have a business. And I guess my mom owns a percentage and my dad owns a percentage. Wouldn't that be right? I'm just making that up. I'm not sure.
Sure. Yeah. So, hopefully they've got a life policy on each other.
Should they buy?
Yeah. Hopefully they probably don't need a buy-sell, but, hopefully they have a life policy on each other.
I'm thinking if you get divorced and you're a married couple, you own a business
together.
and then you get divorced.
And then you don't want to be in business with them anymore.
He's just like, yes, buy-sell agreement, yes.
Well, I think it goes back to, it depends on the type of policy that you put in that buy-sell agreement, what that cash value is, because now that becomes part of that divorce discussion or separation piece is, where does that cash value of that policy go to, and how does that get divided out amongst us in that divorce piece?
Okay, good. So that's another good scenario, I guess, to have this policy on, right?
It's divorce.
Not divorce, just like those two, that specific relationship. Because, it's like these two right here, if they're just friends and they own a business.
It's different than a married couple.
Yeah, but as
that
a married
would probably
couple,
be a prenup.
Yeah.
Well, okay then.
But I think it's
I'm
good
getting
to
too technical.
I think it's good to have those what if conversations.
Yeah.
And really just look at your situation
Correct.
and your scenario because,
Yeah. So any kind of industry, farming, what is most common or most frequent industries that you see doing this?
I think it's small businesses.
Yeah, small
is really
businesses.
the biggest piece that we see that come up as an opportunity because, when you have a small business, you have two people that have great ideas and you're working together and you depend on both partners to make that business exist and be profitable. And then that conversation then comes to, well, what would happen if partner A passes away or partner B even becomes disabled and can't contribute to the business? Then you can use some of those proceeds. But to me, the biggest thing is a small business and how that would be greatly affected, because in a small business, we know both partners are very contributing in that business piece.
Yeah.
And when one is taken away or taken out of that equation, there is going to be a loss of some kind of business and revenue.
Yeah, until they can find another operator, owner, whatever it looks like, changes completely. So how long does it typically take to get a policy like this in place? The valuation has to take some time, drafting the agreement up with your attorney, and then coming to you as insurance. How long does your portion take typically?
Anywhere between just 2 or 3 weeks to a month, depending on, the health of the person and the timeliness of getting all the paperwork done and processed.
Okay, so typically they would do a medical exam as part of this process.
Yeah.
Are there any other, so the steps of the process, maybe you could walk that through. So what does the insurance steps look like? So you come and you apply.
Yep. So then we, have that conversation with the insurance company on the life insurance side about why we're asking for X amount. Then we go through the whole application process. We will schedule a paramed with a paramed company where they'll come on site, come to you. We'll do a 3-way call to get that scheduled for you to do the blood work, do the blood pressure, do all that. Then you'll sign the partners will sign some authorization points to get the medical records from the doctors and get all that. Then it goes through the underwriting process from the carrier's piece, and they'll look at all the health industry, everything that goes within that. And then they'll underwrite it, come back to us. with a price premium based on the policy you've selected, and we come back and present that to you. So, that's a pretty clean situation. There are some times where it does get a little bit stickier because of the agreement or the type of agreement it is, or a loan or whatever involved. So there is some additional steps in those.
Great.
Have you ever had to deny someone of this policy because of their health?
Oh, sure.
Oh, really?
Oh, yeah. It happens.
Is that a hard conversation?
Usually.
If they do, if they can't, what do you tell them as an agent? Like, what's your next best recommendation for someone?
Well,
because the reality is, if there's people that can't get this policy, how else can we help them?
Well, we have, reapplied where somebody's had some health issues in a history of them. And, sometimes the insurance company will come back and say, well, reapply in a year or reapply in 2 years. We'll take a look at it again. So there's possibility that they could get it approved at a later date. Just more time has to pass, and show some good health between
some improvement in your health.
Improvement in health.
Okay. Stop smoking.
Yep.
Yep. I don't know.
Yep.
So good. If there's a business owner that's listening and has no agreement in place, what should they do tomorrow?
Talk to their partner.
Talk to their partner.
And just talk about the what if, that, they need to be thinking about that. I think that it needs to be brought up and discussed. Everybody is busy and operating their business, but if you don't think about the long-term things that can happen, you can get caught off guard real easy.
Yeah, we say that I feel like we've had more conversations about legacy and how to set yourself up and your family up for things just in case. And this is just another one of those things, especially for small businesses, like you mentioned, that needs to be in place.
Yeah, it's their life.
Yeah.
I mean, that's what they do day in and day out. It's what they depend on to pay the bills and to forecast what they're going to do with each other in the future. So it's not a fun conversation, but it's a conversation that has to happen.
I just want to say, we're on here talking about purchasing things, and I feel like a lot of times when people are promoting something, maybe they leave out the price, but are these policies relatively inexpensive, or, for small businesses, they have lots of expenses. Is this something that's like manageable you see with people?
Sure. You can find anything that'll fit anybody's budget.
Perfect.
You can find a term policy that's fairly affordable, or you can put more money into a permanent policy. The difference would be just age and health that you would see as far as the difference in prices.
Yeah.
So, yep, we could always craft something that would fit everybody's budget.
Customizable.
That's right.
That's a good word.
Is there anything else that people should know about this?
Yeah, I think I want to shoot this back to Nathan and talk about, Ashley just had a great question about, affordability of these life policies and how it affect the business. Nathan, we've talked about term and what that might look like, but maybe explain a little bit more how a business could use that whole life policy as that cash value and what they could utilize it for. Because I think that's a misinterpretation sometimes of, hey, I've got a life policy, but I didn't realize that I could buy this other policy that would be beneficial for me even if I didn't pass away.
Sure. And in a universal policy, universal life policy, there's a lot more flexibility in the fact that you could overfund that policy a little bit, put more premium in than what it's calling for. And the more you put in there, there's IRS guidelines of what you can put in, of course. But the more you put in there, the more that cash value grows and provides some flexibility if you wanted to, in a sense, be your own banker. And if you need to borrow from those funds of that cash value policy, you can sure do that.
So I think, Nathan, that's exactly what I was thinking about was having a business owner that's got that cash value in that policy. And let's say it's $50,000 and they've got some equipment they need to buy or whatever, that'd be an opportunity, like you just said, be your own banker. They could take that $50,000 and go up and buy whatever that new equipment they needed to do or expand their business.
Yep. Yep.
Oh, so you can take the cash out and use it.
Yeah, and so for instance, we've got a farmer customer that he has a pretty decent chunk of cash value in his policy, and he will withdraw some of the money for his input cost every year when he's putting out his crop. Then once he sells his crop come springtime, then he puts that money back in that contract. So that saves him from going to the bank and borrowing at interest. So he takes the money out, puts it back in once he sells. So
are there any stipulations around taking cash out like that? I don't know. Are some, like I'm thinking of a CD. If you you can't take money out of a CD.
Like a penalty. That's what you're trying to say.
You pay penalties on that.
Well, yeah. If you don't pay it back, then
so you just pay it back.
So he knows he's going to have the income come back in there. So it's just a way that he, like I said, he is his own banker in that sense.
Yeah, I think that was the point we were trying to make was. You think of a life policy of just, this is a one-time shot that I'll have never use it again unless I pass away. But in that case right there, that's a prime example of let us meet with you. Let us show you some options that we could maybe be a beneficial piece of your business later on and give you an idea of how we could use that policy to benefit you in the long run.
Yep.
Very cool. I never thought it could be a tool like that. So
yeah, and I don't think a lot of small business owners think about their insurance as a tool, and I think that's what we really want to get across today. Not only is it very important for the buy-sell agreement, but also you can use it as an asset, like you're saying, which is wonderful.
Well, great. So if somebody wants to reach out and learn more about this, how do they get in touch with either of you?
Yeah, you can call the offices. We've got office in Marion, Harrisburg, and El Dorado. You can reach out through email, whatever. We'll share that with you guys so you can put it in the podcast notes and give us a call. We'd love to sit down and go over everything with you.
Learn more about your operation.
Absolutely. So you two are the main guys at FSB Insurance they'd want to talk to about this.
I believe so. Yeah.
Awesome. Thanks, you guys, so much for sitting down and talking about this. I learned a lot. So
thank you very much.
Thank you.
We'll see you next week.
So, Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. We'll see you next week.
See you next week.